Hi, Scott and Ann Breuer here, and today we're pleased to welcome Scott Miller with the Bank of England. Welcome, Scott.
Hi, thanks, Scott and Ann. How are you guys doing?
Great.
Great, how are you? Well, Scott, we wanted to just kind of have a quick conversation with you that there's so much chatter out there about the interest rates. Can you help us to understand how the federal rates affect mortgage rates?
Yeah, this is big for everybody, and it causes a lot of uncertainty out there. The Fed's job is to monitor the monetary supply and try to keep inflation in check. During COVID, they verbally said they were going to let it run hotter. Normally, they run at about 2%, and it got out of hand. We're above 8.5 to 9, depending on what numbers you look at. So, inflation is the worst thing for a 30-year bond, which is what mortgages are. They're bought and sold on Wall Street as the bond market. So when the reason the interest rates have gone up is we're competing with stock market, and so the Fed is trying to get inflation in control. When the Fed raises rates, the Fed rate is what banks borrow money at. Then banks lend that money to their best customers at the prime rate, which is 3.25 above the Fed rate, and then all the rates go from there. Now, mortgages are something different because they're bought and sold on Wall Street. So actually, when the Fed raises rates, it kind of helps stabilize the mortgage rates because it's giving a clear message that the Fed is trying to prevent inflation. That doesn't mean when the Fed raises rates that we're going to see mortgage rates drop, but they'll just slowly slow down, or they won't go up as much. They'll stabilize. So it's actually good right now for us when the Fed raises rates. We kind of want that.
Okay, well, thank you for sharing that, Scott. So, why is this time not going to be a bubble?
Well, a lot of people are comparing this to 2008. Prior to 2008, there were a bunch of different types of loans that are now illegal. So prior to that, there were loans that were the 2008 meltdown was really a direct result of fraud on Wall Street. Since then, everybody has to qualify for the mortgage. The law is you have to be able to make your payment. We have to be able to demonstrate that. There are some bank statement programs where we can just look at your deposits, but we have to be able to prove that someone can make the payments. And then appraisals all go through a third party called an AMC, an appraisal management company. So I can't even talk to the appraiser. I won't even know who the appraiser is till I get it back. So we can't just inflate the numbers. So the only reason we had the issues that we had in the midst of COVID, we had 10 buyers to every home that was available for sale. So that was national numbers. So that was the reason for that. Even if we lose 80% of the buyers, it's still a seller's market. So I don't see a bubble. I maybe don't see houses selling over list price like they were, but I don't see that same bubble that we had in 2008.
Okay, well, good to know. So, what do you think the opportunities are that you see for today's buyers and sellers?
Well, right now, I still think it's an excellent time to buy. All the economic data I read still shows our area to be about a 5.5 to 7% appreciation. Yes, interest rates are higher than a historically bought down artificial interest rate. Well, they should be higher. A 220-year average of mortgage rates is about 6 5/8, and we're still about a point below that. So it's still a good rate. And with all the things happening economically, with the Fed raising rates, what they're doing, and with the 10-year Treasury compared to the 2-year Treasury indexes, I believe within 2 years we'll be in a recession, which would be a great time to still buy a house today, get the appreciation that's going to happen because we still don't have enough inventory. And then within 2 years, we'll probably be talking about refinancing and lowering that interest rate or even shortening the term of the loan if that's important to you. So that's why I think it's a great time to buy still.
Great points. We really appreciate that, Scott. So, Scott and Ann Breuer here, Brewer Choice Realty Group, Keller Williams Classic Realty, your trusted real estate advisors. Thanks for watching, and a special thanks to Scott Miller with the Bank of England.
Stay tuned for more future videos as we dig deeper into these important topics. And don't forget to like and follow us on our YouTube channel.